Hi guys, it's me again. I'm going to once again continue a discussion on technical analysis and why I think it's important. And I'm going to continue to use cryptocurrencies even though technical analysis is applicable across the wider market. And technical analysis is not just something you can use if you are a trader, but it is something you can use even if all you want to do is invest. So we're going to take a brief moment and discuss how we use that for the purposes of investing. All right. So I had marked this chart up earlier because I was definitely looking at it. So let's clear this up a bit and we can go through having a discussion on what this is. So this is the candlestick chart of Tesla, and everybody should know Tesla. Now, I'm not suggesting to buy or invest in Tesla. We're just having a discussion for the purposes of education. So if I'm a person and I have a TFSA and I want to invest in Tesla, based on what we were discussing before using Fibonacci, which is a fib retracement is simply a measuring tool from say 0 to 100%, where the move has already occurred, 100% being the top, 0% being the bottom, and we expect a retracement at 50% or lower to be optimal areas to be buying. Okay, above the 50%, those are generally going to be optimal areas where people are going to then generally be getting out of the market. So if I wanted to invest in Tesla within my TFSA, I would first use the candlestick chart. I would use the fib retracement, and as usual, I would say, okay, if I'm going to put $10 on Tesla, and you can put $10 because Tesla is a stock that does allow fractional shares, so you can invest as much as you have. So if I wanted to put $10 in Tesla, I know I definitely don't want to put $10 at the extreme top, right? Because the general concept is buy low, sell high, right? But the candlestick charts allow you to visually see where the high is and where the low is, right? So if I'm going to be investing in Tesla, I'm not spending any money, my $10, until Tesla has moved below the 50% and generally within the 61.8 area. Why 61.8 specifically? Because 61.8 is generally a very responsive area when it comes to price retracements, and historically you can see that price generally comes to the 61.8 and then starts to continue higher movement or lower movement depending on how the chart is looking. So this is just a brief explanation of how technical analysis can be used for trading, but just can be used for investing in your TFSA where there is no leverage being used. But the reason why I like cryptocurrencies specifically, and we're going to use Bitcoin because everybody knows Bitcoin, and of course I'm not suggesting anybody buys Bitcoin, but we're using it as a sort of tool to have a look at the entire market, because if Bitcoin goes up, other coins go up, and if Bitcoin goes down, generally other coins will be going down as well. The reason why I think cryptocurrencies are so important and so powerful is because even though they're called cryptocurrencies, I'm generally on the side of Kevin O'Leary from Shark Tank when he says this is technology. And what that means is, think of the blockchain as a evolution of the internet. So on the internet, you watch videos, you send emails, we have a lot of data that's being transferred back and forth between people on the internet. And all the blockchain is doing is, in a sense, making that a bit more efficient, making it a bit more safe, and making it so that you could have more control over the information that's being sent. So thinking of it in that context, I like cryptocurrencies because it is like our opportunity to invest into the internet, essentially. And I know a lot of people think that cryptocurrencies are fake and that they're not real. But here we have the Fed, which is the Federal Reserve. They are in control of all monetary policy in the US, and when they speak, other countries tend to follow as well. And here we have where the Fed is saying that while the Federal Reserve has made no decisions on whether to pursue or implement a central bank digital currency or a CBDC, we have been exploring the potential benefits and risk of CBDCs from a variety of angles, including through technological research and experimentation. And what a CBDC is essentially a cryptocurrency for a government. It is essentially going to be like the dollar, but on the blockchain. And why this is powerful is because if the Fed is looking into the technology of blockchain, you can imagine that it's something here to stay. The Federal Reserve is not going to be looking into scams or looking into things that are not of real world value. And so I like using Bitcoin when I'm looking at technical analysis, just because I think this is the future of where we're going. Not specifically Bitcoin itself, but just technology and information being shared on the blockchain. But in order to keep this video a bit brief, I'm just going to say what I think is happening with the current market cycle. So, as you know, I prefer to invest in any asset that I'm investing in below 50%, and say, below 50% obviously, but in the 78.6 or the 88.6 areas as well. Here we have Bitcoin already within the 78.6 area, and we do not have a strong visual indication that Bitcoin is going higher. We still have large down candles, and we don't have any of the white. On my chart, up candles are white and down candles are black, so we don't have much up candles. I think that as the Feds continue to raise interest rates, and they're aiming for 4.4%, and I think currently they're at a little bit over 3%. Until they hit 4%, I do not expect any markets to be going higher. And so I'm looking at a dollar cost averaging area for Bitcoin. If I was investing in Bitcoin, I don't own any, but for the sake of conversation, I would look at this area to invest. Why this area? Where I've drawn this blue box, and why this area specifically? Because you hear people speaking about support and resistance, and all that is it's an area of price where price has broken this area in the past, and if we understand that price needs to have a rebalance, then we can expect price to come back to a previous area that it had visited before. That is just the sign of a healthy market, because if, for instance, all we had on Bitcoin was just this continuous upward movement, that wouldn't be healthy. And this is sort of the physical representation of what they consider a bubble to be, right? Because if any asset that continues to move up exponentially without any ability to retrace or any ability to rebalance is going to crash at a certain point. So you find that all markets need to at some point be rebalanced, and this is really Bitcoin's first opportunity to rebalance all of this strong upward movement that we've been seeing for the last few years. So I know that people are panicking and saying it's crashing, it's going down, but truthfully this is just healthy market movement. And so the expectation is that Bitcoin will come somewhere in this area. It doesn't matter where, because I would potentially use dollar cost averaging strategies. That is, once a week or once a month, I'd put some money on whatever asset I was investing in. And the expectation is that from here on out, Bitcoin will start making its way back towards new all-time highs. And it's not going to be like this arrow suggesting. It's not just going to be just one strong movement to the upside, but obviously it is definitely going to be smaller movements, up and down, 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 potentially over a year or more. But when looking at this, we're looking at it in terms of, say, a 5-year plan, and not as something that can be achieved in, say, 2 weeks. Thanks for your time. I'll definitely speak to you guys again.